Well, it's clearly overdue. I mean, you look at some of the internal conditions of the market, it elicited that all the signs that suggest we were due for a ricochet rally of some sort. And the key, obviously, is whether it's sustainable or not. And I think ultimately it will prove to be. I'm not sure yet we found a durable bottom to necessarily claim that this correction is over. But in the meantime, to your question, I think continued dysfunction out of Washington is going to keep the market back on its heels when it's already grappling with some of the issues of the day that have yet to be resolved, namely trade negotiations with China. And clearly a Fed, regardless of the behavior of Chairman Powell or not, is advocating a stance in which they're likely to continue to raise interest rates because the economy is sufficiently strong to warrant it, right, let alone, obviously, the machinations coming out of Washington on all the aforementioned subjects. So I think it's enough to keep pressure on equity prices in the near term, even beyond that which we get from a snapback rally, whether it lasts just today or in the coming days.
Kevin, do you have a list of stocks that you think have gotten too cheap that would be good values here?
Yeah, I take a look at the utilities. Some of the consumer names seem to make sense to me. So any kind of sector play along those lines would make sense. We still like the United States better than the rest of the world. And I'd point out that one of the big shearing points this year has been this disconnect between foreign economies and our economy. So we've just said a bunch of times that our economy is very strong, and that's why the Fed is raising interest rates. But look at the rest of the world. The rest of the world is not so strong. In fact, we've got some weak data recently out of China on industrial production, et cetera. So there's been a clear separation between growth here and growth around the rest of the world. And when you put it in that context, it's easy to see then why 2018 was a much more volatile year than a coordinated growth 2017.
Yeah, we do have to look at the global economy, that's for sure. Mark, I mentioned earlier David Tepper was saying he was nibbling at this market after the big declines we saw here. I see you actually have some stock picks here. Visa and Walmart, I guess, on the retail side, and Disney, which, by the way, had the 3 top grossing movies for all of 2018. Their Disney Studios has been very strong this year.
Well, you know, content is king, and obviously Disney is acquiring it and is a big player in that industry. The other two, of course, are consumer-facing, and given the fact that our underlying case is for the economy to continue to post positive gains over the balance of 2019, and that the consumer is in good shape and is more likely than not to continue to spend. We saw, obviously, very strong holiday sales here of recent, I think, indicative of the strength of the consumer. Then we want to be positioned to take advantage of those industries, whether it's Visa transactions or Walmart buying, that are going to benefit from that.